Hello, this is John Smallwood, certified financial planner, senior wealth advisor at Smallwood Wealth Management, located in Red Bank, New Jersey. Today, we're continuing on the conversation of the scorecard, and we're focusing on some of the more protection items, and these protection items are super important to the optimal mix of your wealth curve blueprint. The blueprint, again, snapshot of income, taxes, savings rate, lifestyle, current assets, current liabilities, future liabilities, life insurance, disability insurance for the foundational items with long-term care and pensions and umbrella and wills and trusts. The goal of the financial planning process: reduce taxes today and in the future, reduce risk today and in the future, reduce fees and costs today and in the future, to help increase savings rate, to help put more benefits and more protection around your wealth, developing strategies to increase your retirement income without running out of money and passing more to your family. Those 7 core items are the focus and the foundation of everything that we do in a planning process. Most financial plans do the exact opposite. I don't understand that, but that's what they do. And when you look at them, you realize this, okay? In building a blueprint, you might make a high income. You might have lots of assets. You might have businesses and real estate and all these wonderful things. Most people that I know, they want to talk about asset protection. Asset protection, a high level of concern for a lot of people. The core, the easiest, the step one in any asset protection program is the utilization of an umbrella liability coverage. Out of the 29 years that I've been doing this, most often people don't have one. And most people don't even know what I'm talking about right now with an umbrella liability policy, okay? Most people do, but some people don't. So let me step back and explain it a little bit. But the idea is that your car insurance has liability that protects for anything that's related to the car to a certain level or a limit. The house will protect the liability that's stemming from your house. The umbrella blankets over the house and the car and gives you higher limits of liability, but also covers things that are not related to a house or to a car related incident. You could be at the mall and trip somebody down the steps and they're suing you, okay? Well, car insurance is not covering you and homeowners is not covering you. It's the umbrella that's going to cover you in that category. What are we really trying to do here, right? Well, if I'm a high income earner and I get sued and I don't have the proper umbrella, my income is at risk. If I've accumulated a lot of cash, that cash or non-qualified brokerage accounts and non-IRA assets could be at risk. Qualified plans and IRAs have some level of creditor proofing, and each one has a different level. Life insurance cash values have some creditor proofing depending upon the state that you live in. Trusts have creditor proof, but those are advanced stages, okay? So the key is having maximum umbrella coverage in relationship to your net worth. If I am retired and I have $1 million of assets, the combination of liability protection and umbrella should be about $1 million. If I'm worth $40 million and I don't have an umbrella liability policy and I get sued for something that's out of my control, I like to joke around that I'm driving, drinking coffee, texting, and I run a red light and I name somebody, right? Well, what's going to happen? I'm going to get sued because I was negligent, correct? If I'm negligent, I'm getting sued. And if I'm getting sued, I don't have the right coverage. Everything that's taken me to get to my net worth can be taken from me overnight. And if the insurance company is not on the hook for a lot of money, I'm not going to get great representation. So there's certain principles behind this. Our goals behind this is to have the maximum amount of protection in this area with the least amount of cost, meaning high deductibles, high liability limits, and really making sure that that premium is optimal. I don't want to spend a lot of money on it, but it's cheap insurance to protect what you're doing. So when you build your blueprint and you look at what your umbrella liability is in relationship to the function of your income and a function of your net wealth, and you don't have the right amount of it, you have no time in order to build this up. Like, protection must be max today, because today is where you have the problem. And if you're not covered today and the problem happened tomorrow, you can't go back and get a redo. Okay. So we believe in part of our financial planning process to understand that entire protection component so that it's optimal for your specific plan, not your neighbor's, your plan. So let's build a blueprint. Let's make sure that this coverage is optimal, and let's make sure that you're protected properly. Welcome to the end of the video. Smallwood Wealth Management is an investment advisor representative. The opinions expressed by Smallwood Wealth Management and guests on this show are their own. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented for this educational purposes only. Moreover, no listener should assume that any discussions or information presented serves as a receipt of or substitute for personalized advice from Smallwood Wealth Management or from any other investment professional, and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Smallwood Wealth Management is not a law firm or an accounting firm, and no portion of this presentation should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Thank you for listening.